Have you ever wondered how far optimism might go in 2025? Well, in today's video, I'm going to be breaking down my technical analysis on OP, sharing my optimism price prediction for 2025. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's go down to the desktop and find out what's going on with OP. So here we have optimism paired up with USDT. We are on the one-day Binance chart here. There's a fair bit of data and to kind of go through and digest. We've got data from June 2022 all the way through to current at the point of recording today's video, November 2024. Now, in order for us to be predictive over where we think OP is likely to go in the future, we're going to use a couple of tools. We're not going to rely heavily on your technical indicators like MACD or EMAs and SMAs and smart money concepts, things like this. We're going to actually utilize more price analysis based technical analysis, right? So we're going to focus on Elliott wave, and we're going to utilize Fibonacci levels in conjunction with that to be predictive over the future. What this does is it allows us to take a look at the buying behaviors and the selling behaviors and be predictive over what is likely to happen based on how they've behaved previously. Okay, so we're going to use Elliott wave, which basically means and tracks people's behavior, tracks herd behavior, and based on their behavior, it will predict out what they are likely to do next, what those people are likely to do next. Elliott wave and Fibonacci go together hand in hand. You cannot use one without the other. Okay, so we're going to use Fibonacci. That's this retracement tool right here. Okay, I'm going to show you the settings that I use, which are these ones. So you can pause the screen and kind of copy these if you want. But this is what it is for reference: 0, 0.236, 0.382, 0.5, which is not technically a fib level, but it's a level that's by default. And then we've got 0.618, 0.786. I've also added a couple additional ones down here as well, so 0.702 and 0.882. We then go into the extensions after 1, which would be 1.236, 1.382, and 1.618. These are the key levels that we need to monitor when it comes to Elliott wave and being predictive over where we think the future is going. Now, the other thing that's really important about the Fibonacci levels is that I have this tick box down here ticked. If I do not, you'll notice that these fib levels are changing, the prices are changing as I untick and tick this box. This is because my charts are in a logarithmic style. They are basically calculating the distance to be plotted based on the price movements, right? If I turn that off, then it's assuming that I do not have my chart in logarithmic style. Now here, because it is, I keep that ticked and it's not a problem. Now, for reference, anyone who is new to TradingView, this is off by default. So if you are using logarithmic style, you must make sure that this is ticked. For reference, that is activated down here. If I untick it, you can see the price action, the price chart is changing between logarithmic and non-logarithmic. I make sure that mine is in logarithmic, and I also turn auto off so that I can adjust the chart accordingly. Okay, so those are the two tools that we're going to use. That's how I use the charts. And so we can now make a start on where we think things are going to go in 2025. Now, for us to be able to predict the price for 2025, we need to understand the behavior that is currently going on within the price chart. Okay, so we're going to take a look over here to start with. Okay, and we can see that we did have a low point over here. Okay, this was the 18th of June 2022. A very interesting kind of three-wave move to the downside and then an explosive move to the upside. Okay, so this first little part here is actually kind of not all that important by the looks of it. It's a very interesting structure, but it doesn't really give us any kind of grounds for thinking of impulsive breakout moves to the upside. The impulsive breakouts actually are happening over here, which was on the 13th of July. Okay, so we have a bear market low at 39.6 cents for OP, but actually our structures don't really start to really take off until a little bit later, which was on the 13th of July. And that low price was actually a different one, coming in at 40.5. Okay, so what was interesting about that is we did have a three-wave move to the downside. Again, with Elliott wave, it can be a little bit complicated. Okay, so Elliott wave, let me actually draw that correctly. Elliott wave basically monitors the behavior of people buying and selling. Okay, they usually come in 3, or 5-wave patterns. For this, I will use the majority is A, B, C, W, X, and Y. You have 1 through 5. We have W, X, Y, X, and Z, which is 5 waves but is corrective. We then have 1 through 5, and then we also have triangle-based patterns as well, which would be A through E. Right? These are kind of the different structures that you would see within Elliott wave, but for the most part, our charts here is looking quite simple. So as we can see, this correction, right, we had this move to the upside, okay, where we did top out just here at $2.24.3. This move to the upside was very interesting in the way that it moved. It was a 453% move, basically going from July 22 to August 2022. Good move. A correction to the downside is also a very interesting one. Again, corrective in the way that it's moved. We can use the 3-wave pattern there. We can also use the Fibonacci to confirm it, okay, because there's a relationship between the waves and the psychological levels on the fib levels. They kind of go hand in hand. If I put that right on that wick there, you can see that we would have seen this coming down between the 1.236 and the 1 level. That is basically 54.3 to 65.8. If I draw a yellow box into that range, just so you guys can see, we have those wicks coming right into that targeted range. Okay, so again, the behavior is quite clear. Okay, we saw a very corrective move to the downside, impulsive move to the upside here. Okay, very explosive, but again, even this explosive move to me looks corrective, and I will go ahead and do the due diligence using these fib charts as well, and we can see right here it comes to the 1.236. Okay, so very corrective patterns even to the upside there. That's not necessarily a bad thing. But we'll label it up anyway. So we have the A, the B, and the C. We have the A, B, C to the downside. And then we get into what's a very interesting kind of explosive move back here, move down, and then more explosive moves to the upside. Now, if we start measuring the distance on this entire structure, okay, this is where things really start to come together. You can see that we would be targeting out an area between 1 and 1.236. Now, in this particular instance, we actually, what happened here was it truncated. And what we mean by that is that it fell short of its expectations. So its expectations were 352.9 to 528.6. And you can see it got close, but fell from that height. Okay, so it didn't quite make it to its targeted range. Okay, now inside this internal structure, what is really interesting to me is you end up with well, basically this very interesting kind of structure towards the end, and to me it looks like we had a very interesting kind of finishing structure. So this is, in my opinion, an impulsive move, but again, it finished short of its expectations. Okay, so here we can see we did hit 1.618. We had the correction, and that 5th wave movement was just really, really weak. So we have a wave 1, 2, 3, 4, final truncated 5th wave, which should have pushed up into those higher ranges, but for some reason didn't. Again, sentiment could have shifted at that particular moment in time. Now, with that 5th wave movement, we would be looking for a 5-wave finishing structure. And taking a look at this, I would say that it does appear that we potentially do have that inner working going on there with what would be called an expanding diagonal. Okay, we could argue that maybe even there's a diagonal element to that. But anyway, for the most part, it just fell short of its target. So we would have been looking for moves to the downside after that. Now, that 5-wave move to the upside is an important one. Okay, so we track this 5-wave move. Now, 5-wave moves are never on their own. So if we have a 5-wave structure like this, which is obviously contains those micro 5-wave movements, okay, so we can draw those in just so you guys get an idea. And then of course we had that little diagonal ending structure that we saw just there. Okay, so if that's the 5-wave move that we're tracking to the upside, this could only appear in one of two places. It'll either appear as an A wave, okay, which means we have a B wave correction and then we have a C wave high, or alternatively, all of that is your wave 1, you have a wave 2 retracement, and then you go into a 3, 4, and 5, which of course would mean that you're tracking this kind of next big explosive move to the upside, followed by a finishing bull market high of that 5th wave movement, right? So two different places that things can kind of go, A wave or wave 1. Okay, now for the most part, if I take a look at the price action once again, bring that back into view here, we can see that we did push up quite aggressively, and it does to me look more likely to be that actually this is a part of a much bigger play. Okay, so as we were looking for this high that we say truncated, fell short, we can actually see here that we ended up with another 5-wave movement, which would be 1, 2, 3, 4, 5. And of course, we can see another diagonal pattern playing out right here as well. This one actually is a contracting diagonal, which is really also a very interesting kind of pattern. Wave 3 can't be the shortest, wave 5 is the shortest, wave 1's the longest, and it contracts in. Anyway, nonetheless, as I kind of digress a little bit into this thought pattern here, we can see that this comes right up into these higher range of expectations, not only on the bigger macro piece there, which I'll get to in a moment, but also on our typical kind of 1 to 1 to 1.236 levels. Now, I know this video is about talking about the price prediction for 2025, but this is a precursor to that, because understanding how the price action has historically moved in terms of the behaviors that has led into it is very important for being able to predict out the future. So here we have an A, B, and C structure that finished, and that's a part of the initial A, B, C structure that you see over this side. That is known as a W, X, Y, a double zigzag pattern. So we basically have a W, an X, and a Y/8, and it's played out over multiple years. Okay, a lot going on there. There's a lot to unpack. Like I say, Elliott wave is a complex subject. That's why I put together a whole course on it over at 𝗕𝗘𝗪𝗀𝗪school.com. Usually I do run discounts on that course. If you're interested, check the links in the description below or join us in our free Discord server and learn a little bit more about Elliott wave, because it is very, very powerful when you kind of start to understand it. Now, what does all this mean about 2025? Well, this actually puts OP at a very interesting spot. So we can see that this move to the upside was obviously a peak with a 5th wave movement marrying up with the first one. And it means that we are in a corrective pattern to the downside. This corrective pattern to the downside also follows the same pattern as what we saw on the way to the upside, only not as difficult, okay? And what I mean by that is you end up with the double zigzag pattern again. So you have your A, B, C structures appearing all over the place. You have your A, your B, and your C. Again, that one fell short of its expected ranges as well, although we haven't yet broken higher, so we could potentially be looking at a little bit of a wobble. We are currently finding resistance on that 200 EMA as well, but it's not really about the here and the now so much as it is about kind of trying to figure out the future moves. Now, as I kind of go into this in a little bit more detail, the most recent price action, very corrective patterns to the upside here, not overly too concerned about that. Very corrective gain to the downside. I don't think that's a worry there. Let me just do the check to make sure that we are on the right path. Well, yeah, we're on the right path. We did rally up higher, so not too bad at all. And we're looking at, again, very interesting explosive moves to the upside. We also do have to climb above that 200 EMA. To kind of get things across the line. We have a very interesting kind of pattern emerging in here. Now, this one's a little bit more difficult to kind of place, but I do think we have a very interesting structure. I need to measure this distance right here. This is going to tell me where we currently sit with that. So that is shorter than wave 1, which is interesting. And then, or the first little move anyway. Up here is a little bit more, and that is shorter. So we could be, could be contracting. Could be, I don't think we are contracting, no. So this is, again, a very corrective pattern, actually. There's no major kind of diagonal based patterns that I can see in there. We have 3 waves up, 3 waves down, 3 waves up, 3 waves down. If we get a breakup, then maybe we can argue that we are in a expanding diagonal. That would look more like this. You'd have a 1, a 2, a 3. This would have to finish 4, and then you'd have to have a bigger kind of final 5th wave move to the upside. The expanding diagonal would be basically exactly that, right? People have probably heard of a megaphone pattern. A megaphone pattern basically is an expanding diagonal based pattern essentially, but you'd look for something to this effect. If you see this pattern playing out, then I think we can be very confident that we're done with these lows. If not, and we find that actually we break down deeper than the wave 2, then maybe we've still got a little bit more of a tumble to go, which will change the price prediction a little bit. But for the most part, we're going to use we're probably going to use that as our current existing low point that we have, because I do think that is where our future lies at the moment, considering everything that's going on in the market at the point of recording. That being said, if we then take all of this and we take all of this understanding, if that is going to be an expanding diagonal, it is going to be the beginning of something big. in my opinion, and that move to the upside for OP is going to be pretty powerful. Now, our existing low on the 5th of August comes in at $1.6.1. So I'm going to go ahead and move the Fibonacci chart here down to 61 so I can get it on the right level. There we go. Okay, so let's go ahead and take a look at our bigger macro picture then. So understanding how the market has behaved, it's behaved in an impulsive way, which basically means that when OP starts getting some buying pressure, it moves in really big waves. It doesn't move in lots of choppy corrective structures. It moves in very big impulsive structures. And so if we are to see another big run to the upside or another big breakout, OP is going to potentially really take advantage of that surge. Our price targets for 2025 are going to be very, very interesting. You can see that we've already kind of reacted to this 0.618 area at the previous all-time high. That is also going to be an interesting point of resistance. So $4.93 is going to be an interesting point, all the way up to $7.48. I'm going to go ahead and repurpose one of these yellow boxes that I've already drawn on the chart here, and I'm just going to move it over to this side. Okay, so here we can see this initial kind of thought. We're looking for a price target of $4.93.1 to $7.48.7. Now, that might not sound like amazing from the current price. We're talking about another 200 to about 380%, and people might be thinking, it's not that amazing. But actually from like the previous lows and stuff, that's actually not that bad. But that's not where I think our bull market peak is likely to be. With everything going on with Ethereum, by the way, guys, I do see layer 2s really kind of taking market share. And I do think, we've got Unichain, for example, we've got Arbitrum and Optimism potentially being really big key players alongside things like Polygon's Matic. I think OP is setting the stage for some fantastic growth. And I think our 2025 bull market target should actually be somewhere between $12.74.4 and $22.91.3. Of course, getting there isn't going to be an easy feat, but it's something to kind of keep in mind. From the point of recording this video, we're talking about a 700 to about 1300%. So, 7x, 13x, something to that effect would be more reasonable from the current prices, in my opinion. I do see OP being a key player in the space, and I do think these targets are realistic in my humble opinion. But of course, guys, it is just my thoughts and opinions on the data in the charts. What are yours? Let me know your price predictions for 2025 in the comments down below, or join us in our free Discord server and we can continue the conversations down there. If you found this video helpful and informative, smash that like button. If you are new to the channel, subscribe, and don't forget to check out this video right here. It's not one that you want to miss.